Let's now solve question number 1A from our May 2025 examination paper. This question is on the topic of accounting standard 10. This is not going to be review of the paper, but this is going to be detailed solution video. What is the difference between review and detailed solution? You will understand at the end of the video. Watch this now. Hardy Limited intends to extend the factory setup on the adjacent plot with disintegrated old premises. Basically, they're extending their office. They've used hi-fi English to explain the same. It acquired a land area of 250 crores, paying rupees 25,000 per hectare. This is the cost incurred for acquisition of the land. This will be part of our new factory building and cost, whatever we are computing. For the purpose of computing depreciation, land and building will be regarded as two different assets. However, for recording, we can treat them as one single asset. We will not charge depreciation on land because it has indefinite life. I hope you'll remember. Going ahead, then let me write that first. I will write here purchase price of the land. It is 250 hectares into rupees 25,000 per hectare, which comes to 62,50,000. What do we have after that? Hardy incurred stamp duty and registration charges at 5% of land value. I will include that 5% into my cost because directly attributable cost, any cost incurred in the process of acquisition of that land or anything till the time the asset is ready to be put to use is to be included in the cost. Without registering the property, it won't become yours. That is the reason you paid that stamp duty. And the other amount is registration charges paid to the municipality department there. 5% of 62,50,000 is 3,12,500, and this is also part of our cost. What do we have after this? Next, we have some legal fees paid 4,75,000 for the purpose of acquisition of land. Without incurring this 4,75,000, we would not be confident of buying that land. They've given me some papers. I should check the authenticity of that paper. No, someone tomorrow gives me documents which says that Vidhan Soda belongs to them. Can I give money and buy? No, I should run these papers through a lawyer who will tell me whether those papers are valid. Are they forged documents? Are they the legal owners? So that legal due diligence to be done at a cost, and I've paid my lawyers 4,75,000. And this 4,75,000 is incurred in the process of getting rights on that asset, which is again directly attributable expenses, which will be included in the cost of my asset. What do we have after this 4,75,000? Hardy incurred 37,85,000 for demolishing the old premises thereon. I bought one piece of land to construct my factory. There is already one old building in which ghost is there. Sorry, there is already one old building there. I don't need that building. So what will I do? I will demolish that building. Demolishing of the building will not happen like I do this and then it will fall. No, I'm not Rajnikant. No, I would have to hire a lot of deconstruction people and then it should be demolished. For that purpose of demolishing, I need to incur 37,85,000. Demolition or deconstruction of the old asset will not be included in the value of the new asset. Usually, that should be charged to PL. Here, this is not like I'm removing my old building to install my new building. No, I'm demolishing an old building which I got along with the land which I don't need. So that cost should be added into the cost of my new factory. 37,85,000. But when I demolish that, there will be a lot of debris, that broken brick, metal combi and all of that. What will I do with all of that? I give it to Gujri uncle. When I give it to Gujri uncle, he gave me 12,60,000 rupees. This 12,60,000 is like sale made by me. Whenever there is sale, someone goes, GST. They asked me GST also. So I've collected GST also. This 12,60,000 includes GST of 5%. So in this 12,60,000 what I collected from that Gujri uncle, I cannot keep completely with me. 5% should be paid to government. So only balance is mine. Can I do 12,60,000 into 5%? Don't do that. The reason is 12,60,000 includes 5%. This is 105. How much is 100 in this? How do we find 12,60,000 into 100 divided by 105? 12 lakh is the money that I'm recovering. 37,85,000 is the money that I'm spending. For demolishing, I incurred 37,85,000, and on demolition, I've got 12 lakh rupees to me. So my cost of demolishing that old factory building, what was there, is 37,85,000 minus 12 lakh. I would write demolishing old premises 37,85,000 less sale of material salvaged. How much is the material salvaged value? It is 12,65,000 into 100 by 105, which will give me 12,04,762. Please do 37,85,000 minus 12,04,762. Okay, 12 lakh, 12 lakh 65 or 12 lakh 60 here. Oops, sorry. 12 lakh 60 into 100 by 105. You get 12 lakh. Now if you deduct, you get 25 lakh 85,000. Is there any other information? That's it. They are telling till the new site with extended factory premises is ready. Temporary, the company needs to move present production facilities to another site temporarily. We've discussed this very clearly. Temporary movement of the existing factory to another premises, because you're doing construction here, will add no value to the existing, new factory that we're building. When we're building or installing a new factory, that old office premises or factory is temporarily shifted somewhere. Once this is constructed, you shift it back. That shifting cost, temporary place rent, installation of that asset there, and then transportation cost again, installing here, that will add no value to the building that you're building or factory that you're constructing. So such cost should be treated as revenue expenditure. It should be transferred to P&L. That should not be capitalized. So what is the value of the building that you constructed or factory that you built here? 96 lakh 22,500. They've given details of that cost also. Setup cost 7 lakh 50, rent 12 lakh, removal cost 2 lakh 50. They're asking us, management is of the opinion that the cost of moving of production facilities to the temporary site should be capitalized. You are required to advise. What is your advice? Yes, that advice, our advice is such treatment is incorrect. Cost incurred to move present production facilities to temporary site, that is in the form of setup cost, rent and removal cost, are not to be included in the cost of the asset. They have to be charged to P&L because they add no value to the asset that we are constructing now. So this is our suggestion. And they have asked one more question also. You are required to compute the cost of the land. Same, yeah, 96 lakh 22,500. And this is a 7-marker question in your May 2025 examination of CA Intermediate.